Yes. Today, our education is on VAT compliance in UAE. We have to understand what is the taxable supplies, zero rated supplies, exempted and out of scope supplies. Now, the objective of this session is to understand the supplies under UAE VAT. We have to identify the sales which are taxable, zero rated, exempt, and out of scope, and what are the documentations required for them, and the compliance from the FTA. It was introduced in January 2018. The standard rate is 5%. It is governed by Federal District Law number 8 for 2017, and it is updated regularly on different regulations. First, we have going through taxable supplies. Whatever goods and services are supplied in the UAE, within UAE, is taxable under VAT at 5% rate. Whatever sales are there for goods within UAE are all taxable supplies with a rate of 5%. And if it is services and to it's a UE customer, then also it is taxable at 5%. And if we are importing any goods or services for business use, then also we have it is taxable supplies under 5%, and we can claim reverse charge on this supply on import of goods and services. And the key requirement for taxable supplies are VAT invoices. In the tax invoices, we should, whenever client is preparing a VAT invoice, VAT registration number should be there. The rate of tax is there and the amount should be clear. Uh, Either up, down, somewhere the rate and the amount should be clearly written on the invoice, and the VAT registration number for both the supplier and the buyer both has to be mentioned on the invoice. Otherwise, if we are claiming refund or if FTA comes with a audit requirement, FTA will need registration numbers on the invoice. On all the tax invoices, supplier's registration number and the buyer's registration number is required. Then, if it is goods, the proof of delivery, or if it is service, completion of service is required. Then sometime FT asks for the payment proofs also, if there are cash receipts or bank transfers, or in even if the bank statement, we can show the payment receipts. So all that is required to be kept and for VAT returns and refunds. Then comes the zero rated supplies. For zero rated supplies, we have to prepare the tax invoices, and we can claim the input VAT on the zero rated supplies also. Zero rated supplies are export of goods outside GCC implementation states, exports of services to non residents of UAE, then international transport of goods and passengers to other countries. Then first supply of residential building within 3 years of completion. Certain healthcare and education services also comes under zero rated, and supply of precious metals also comes under zero rated. For these zero rated supplies, the proof of export is required for goods. For service recipients outside UAE with no business presence in UAE. If it is a business in UAE, then obviously it is a tax resident, and then you have to put a 5% VAT on that. And proper export and payment documents are required. For zero rated supplies, you should always have the custom declaration letter, entry exit bills, airway bills, all that are required for zero rated. If FTA comes back for any audit and even for VAT refunds, you have to submit all the custom declaration letters with the invoices. Zero rated invoices, then custom declaration, entry exit certificates, airway bills, all FTA checks, and then only they will approve the VAT refunds if we are claiming VAT refunds on zero rated supplies. Then proof of shipments and for payment from foreign clients are required. Service agreements showing client's location that it is outside UAE. VAT invoices showing 0% rate. Invoices should clearly show the tax rate and the tax amount, it is zero. Then FT approved licenses for healthcare and education services. Then Then there are exempted services. There are some supplies which are exempted from VATs, and there is no we cannot claim input VAT on those services like financial services, residential rent, local passenger transport, and their land. Then there are out of scope supplies. If a if a company is registered in UAE, but it is goods are not coming in UAE, it is exported from Russia to some other country, then it is out of scope supply. It does not come in UAE. So sales of good where both suppliers and customers are outside UAE, transfer of a business as a going concern. If one business is getting transferred from one person to another person as a going concern, they are not shutting the business. It is just going on. Then it is out of scope supplies. Supplies between members of the same bed group, non-business transactions, personal transactions, personal assets. These are all out of scope. Government fees and fines are also out of scope, and salaries and employee benefits are also out of scope. We do not mention any out of scope supplies in our VAT returns, and don't prepare any VAT invoices or input tax recovery is not possible on out of scope supplies. We should maintain the correct documentation for proper classification should be there, proper documentation should be there for financial statement and compliance scores. We have to maintain the VAT records for at least 5 years. All the invoices, all the custom declaration, everything we have to keep for at least 5 years. It includes invoices, contract, custom documents, ledgers, whatever is there, whatever we are submitting to the FTA, we have to keep it that also for records, and we have to reconcile the sales and purchase with our VAT returns. Sometimes we misclassify export as zero rated sales, that we have to check whether it is a zero rated sales or it is exempted sales, or it is out of scope. We have to classify that properly. Then export document, sometimes these export proofs and invoices are missing, so we have to keep track of that. Then we cannot claim input VAT on exempted supplies, and reverse charge sometimes it got ignored, so we have to keep track of reverse charge also on imports. Common challenges for this is that we sometimes misclassify export and zero rated supplies, and export documentations are missing. Some tax invoices are there, but that are not proper tax invoices. Sometimes some VAT registration number is missing, sometimes tax rate are missing or amounts are missing. It should be properly invoiced, and then signature and stamps should also be there for the authorized person. Then there are many clients who claim personal or VAT on personal expenses. So we have to make sure that we should not claim input VAT on any personal or exempted supplies. And then obviously VAT return, late filing and payments.